As you remember, chart is a graphical display of price information of a security over time, and it is the main thing used by technical analysis to forecast securities price and quickly see past performances of a stock, its highs, lows, trends, trading volume, and much more. The main types of chart used by technical analysts are the line chart, bar chart, and candlestick charts. Let's begin to analyze these charts. Line chart. A line chart is type of chart that displays information as a series of data points connected by straight line segments. It means visually representing an asset's price history using a single, continuous line. A line chart is easy to understand and simple in form, typically depicting only changes in an asset's closing price over time. Line chart is least usable chart in the world of trading, mostly because there is no details in this chart, and in trading details is very important. Here it is market data with a line chart, as you can see. It is the market movement over a period of time. And if you compare to other types of charts, you will see that there is missing some information. Anyway, if you use hourly time frame, and we will be speaking about time frames a little bit later at this lesson, so an hourly time frame happens that between 2 points in a timeline, which you can see down here, to connect, use a line with the last price of the end of an hour and the end of another hour, distracting all the highs and lows which were there in this hour period. So there is missing a lot of information, and to use it for trading would be very uncomfortable. However, it could also be useful because it cuts all the noises from a chart, so to speak, and it helps to identify general trends, patterns, key technical data, or analyze historical price changes. Line charts are not optimal when it comes to detailed price analysis, for identifying complex chart patterns, or using advanced technical analysis techniques. Here are pros and cons of using line charts. Pros: clarity and simplicity. Easy to use. Focus on closing prices. Comparative analysis. Line charts are useful for comparing several securities or indices over time, since the simplicity of the lines lets you make easier comparisons without clutters. Cons: lack of detailed information, oversimplification, risk of misinterpretation. Some traders recommend to begin with line chart. However, you need way more information, and in line chart you cannot find it, because it connects only 2 points on a timeline, whatever the time frame it is. Bar chart. Bar chart is type of chart which displays information of the opening price, the closing price, and the highest and lowest prices of a stock or other financial instrument are embedded in bars, plotted as a series of price over a specific time period. Bar chart allows traders to see patterns more easily, analyze trends, spot potential trend reversals, and monitor volatility and price movements. Hourly bar chart, for example, would show the highest, lowest, and closing prices of each hour, as well as the traded volume. Similarly, a daily bar chart would show the highest and lowest prices of the entire day and the total volume of the day. Note that each hour in above chart is indicated by a separate bar. Each bar has a little tick on the left side indicating the opening price of that hour, and the little tick on the right side indicated the closing price of that hour. The length of the bar tells us the trading range for that particular hour, as noted by the arrows on the chart. Here is a closer look at how the hourly bars on the chart indicate the opening price, the closing price, and the trading range of that hour. Long vertical bars shows there was a big price difference between the high and low of that period. That means volatility increased during that period. When a bar has a very small vertical bars, it means there is a little volatility, or there was an equal fight between bears and bulls. But that is a way different topic, and we will leave it for another time. If there is a large distance between the open and close, it means the price made a significant move. If the close is far above the open, it shows buyers were very active during that period, which may indicate more buying in the future period is forthcoming. If the close is very near the open, it shows there was not a lot of conviction in the price movement during the period. There are basically 4 combinations of bars, which includes up bar. If the high and low of the present bar is higher than the previous bar, it is known as up bar. Here is how it looks like on the chart. As you can see, quite a few following bars has a higher highs and lows than previous bars. Down bar. If the high and low of present bar is lower than the previous bar, it is termed as down bar. Here it is on the chart. Quite a few following bars has lower highs and lows than previous bars. Inside bar. If the high of present bar is lower than the previous bar high, and the low of present bar is higher than the low of previous bar, then the present bar is termed as an inside bar. Here it is few examples on the chart. As you can see, on that specific bar, high is lower than the previous, and low is higher than the previous bar. Same goes to this bar. High is lower than the previous, and low is higher than the previous bar. Outside bar. If the high of present bar is higher than the previous bar, while the low of present bar is lower than the previous bar, it is known as outside bar. Let's have a look at the chart. As you can see here, a bar has higher high than previous bar and lower low than previous bar. Candle chart. Candlestick charts and bar charts bears the same information, so it is your personal preference whichever you will choose. Whichever is fit for your personal preferences and fit for your eye, so to speak. Between traders, more widely useful chart is candlestick charts. A candlestick is a way of displaying information about an asset's price movement. Just like bar chart, candlestick chart shows the market open, high, low, and close prices for the specific time frame. The candlestick has white part called the real body. This real body represents the price range between the open and close of that time period. When the real body is filled with preferred color, which represents whether it was falling or climbing candle. Candles has 3 basic features. The real body, which represents the open to close range. The wick or shadow, that indicates highs and lows of that candle. The color, which reveals the direction of market movements. Same as bar chart, candlestick chart has 4 main types of candles. Up candle, down candle, inside candle, and outside candle. Speaking about colors of candles. Pretty much all the platforms allow us to change as you like. Most of traders prefer to choose green as a climbing candle and red or black as a falling candle. However, it is your personal preference. As you can see, I chose to see red candle as a climbing candle and black candle as a falling candle. It is because visually for me is better this way, and you should choose the way is better for you. Let's quickly talk about chart setup. If you will choose to trade with candlestick chart, choose preferred colors of candles, as we spoke. Also, choose appropriate color of background. Some traders like to see black background and brighter colors of candles. As you can see, for my view, it's better to see white background. You can leave or remove grid. For my preference, I like to see grid. Also, make sure you know how to use other features of your platform. How to add or remove some indicators, how to plot different types of lines, add nodes, etc. Thanks so much for watching, and if you found this video helpful or interesting, please give it a thumbs up. It really helps the channel to grow. And if you'd like to see more content like this, make sure to subscribe and hit the notification bell so you don't miss any future videos. I would also love to hear your thoughts or questions in the comment below. Thanks again, and I'll see you in the next video.